why 90% of the traders lose money. So, hope everybody is doing well, and let's review again why 90% of the day traders or traders lose money. Now, think about trading as a business. Like here, to me, I have a $900, $1,000, actually just turned here, we're live, June 4th, 528. I just made $1,000 for the day. I have a case study running here for over $7,000, and most of the money is on a cover call on Apple. If I expand this, you can see, bought Apple 400 shares at 176.21. It's 192. So it is almost what, 20 points minus 4, 16 points profit on the stock. Plus I'm selling the cover call, the resistance day trading zone. So I'm buying support day trading zones, selling resistance day trading zones for insurance, you know, by selling the cover call at 200 and 194, and that is 6,000. So why most traders lose money? You know, I've been trading for now over 22, 23 years, everybody, and it is a fact, okay? And so I'm going to, again, I've explained that in a previous video, but a lot of people like really need to get this. When you get this, then you can go more advanced in options and trading in general. Most people trade at the current price. So if they buy a stock for $1 or they buy an option, they don't understand that number one, if you trade stocks, your probability of success usually is a 50-50. And I'll tell you something, if you buy at the current price and you have no edge of trends, main trends versus the intermediary trend, right? You don't have very solid support and resistance. You don't have retracement area that you can count on, right? You're just trading blind, everybody. It's like gambling. So at best, when you trade like this, it's a 50-50, but really it's less than 50-50. Because traders, they get in, they get out. They get in, they get out. And what happens is their net liquidation value keeps on going down. And by the time the session is down, it's not unheard that traders lose 25 to 50% of their entire account in one day, in 1 week, by doing this crap, right? Or worse, when you buy a $1 option, right, on Monday, it is an asset you buy. You say, okay, I think this thing is going to go up or down. You know, you choose a direction, a put or a call. And you buy that on Monday, and let's say it's a weekly option. Most traders don't understand that that weekly option's time value, time decay will get to 0 by Friday. So let's say everything remains equal. There's 3 components in an option, right? Real value, let's say 70 cents. Time value, let's say in this example, 25 cents. Right? And implied volatility, let's say in the options, which is 5 cents in this case. Okay, 5 cents plus 25 cents plus 70 cents, $1. Okay, what people don't understand is that $1 option, assuming the real value remains equal, the implied volatility remains equal, that 25 cents is a guaranteed 0 by Friday, which means that essentially you bought an asset for 1, and on Friday's 0.75, you lost 25% of your money. That's a guarantee. This is why 90% of the options traders lose money. This is why 90% of the options expire worthless. But think about it. Who makes the money though? The person who sold it to you on Monday for $1 and cover at 75 cents on Friday knows the trick. Usually those are professional traders, they are institutions, they are people that are astute, that understand that selling premium out of the money, out of the current price is where the money is to be made, okay? Or do some hedge technique like I've done here on Apple. But even here, this trade on Apple where I make over $6,000, you got to know where you are buying. Like I had a day trading zones in our full pro tool and our retail tool support at 176. Now it's 192. And you need to have also some resistance to sell income to be able to roll income months after months after months. So 90% of the traders lose money. That's not a good business when you trade directional. I'm going to also explain something else. There's a lot of stuff that are rigged in the market that people don't even know. As a matter of fact, I'm doing a live event Wednesday at 8 p.m. So make sure you attend. If you're interested, you have the registration to the event just below this video on the description of the video, right? And at 8 p.m. this Wednesday, I'll show you why and how you can profit from a rigged market. Markets are rigged, that's for sure, especially on lower time frame, which I will explain on Wednesday. Okay, I'll explain a couple of tricks that I've done and learned, that I want to share with you over the years. The trading zones being a research and analysis firm for the institutions and the retail traders. I have seen firsthand some of the stuff that the institutional, the trading, the brokerage are doing, right, to make those markets inefficient at times for the retail trader, and at best rigged for the retail trader, where your orders are not even getting filled properly. How many times have you had a broker when the market moves very fast, you are the last one to have your orders being filled? Okay. Now another concept when 90% of the trader lose money. Look at this. This is the market. 90% of the year, a market stays in a range, guys. Up, down in a range, right? And 10% of the year, it breaks, and then it goes back into a channel for weeks and months, and then it breaks. But what you don't understand is those breaking days, out of 220 something trading day a year, are not even 20 days per year. So it is very, very difficult for any trader, everyone, to catch those directional break. This is why the astute trader 90% of the time sell income, positive theta, gets a paycheck, takes advantage of that time decay I just showed you from point X to 0, because that's a certainty in the market. It is very difficult to time those breaks, right? And where the market goes. So like here, I can tell you, when we trade, we divide the market by buy zone, caution zone, and sell zone. Why? Because I don't want to have a preconceived idea of where the market is. I'm cutting the market by slices, like here. Bottom of the triangle becomes support on the retracement blue dot. I have another support here in this market at 27.50, 26.50, and then there's a target of 27.80 in the market. And I have an up arrow, blue dot, 75% of a continuation of a trend. But I know here, see those blue lines, there's cluster here, cluster here. This 27.50, 27.80 area is going to become a problem, to the market for potential retracement again towards the 27.30, 2700, and if that fell, the 26.50. So you see, I put buy zone and sell zone. To me here, the caution zone is 26.50 for the overall market till July, right, to the 27.50. Below 26.50, we start cracking, right, and we start selling this market. Above this 27.50, we continue to the 27.80, to the 2800, and we are going to counter again resistance here at the 28.10. So then above the 27.50, this is a buy zone. So you got to have not only a slice in the market, a sell zone, a caution zone that is a ping pong zone, right? That ping pong income trade that you want. See, when you're in the caution zone, you want to sell income here, and you want to sell income here, away from those triangles to make money. And this is super key, like all the trades we've done, and showing you some concepts that are very, very important. How we do those trades, those cover call on Apple, or trades on the bond. I'm looking at the bond, by the way, guys, right now, to see if the bond is going to reject, because I had a ZB resistance, right? When you look at this, and this is why 90% of the trader lose. They don't have a game plan. So look what I'm looking on ZB, which has been a super important thing for me. I'm looking at ping that, which is 90% of a continuation on the downside. But the key is the retest within the trend. So I have a down arrow, ping that. So I told everybody in my community last week, this double bottom, see guys, right there, The retest of the middle part of a double bottom is super important to the DTZ full total resistance here at the 147. So I know this 147 here on the bond, on the ZB, is going to be extremely important. If it rejects, and it starts rejecting today and pass again this 143, that's game over, guys. We start going back again, where what started to look like a double bottom, in fact, is a double top. So look all the stuff that you need to know to not be in a situation where you are caught in rigged market. You need to understand 90% of the traders lose money, you know, when they don't have processes, trends, retracement area, and solid support and resistance. 2, you got to understand 90% of the options buyer lose money. 3, when you do directional trade, you have less than 50% chance of making money. When you sell options, you have 68% to 95% chance of making money. You know, so I do stocks, I do options, but there's a lot of cool ways you can defend when you do options to not be part of the 90% of the traders that lose money. Now, 5, why traders lose money? Because 90% of the year we are in a sideways range, in ranges, and people force directional trade. So I hope this is helpful. As always, if this is helpful, give us a like, share, tag someone that might benefit from those videos on why traders, 90% of the traders lose money. And don't forget, we will see you at the event this